morning, traders! Welcome to the Elliott Wave Street weekly update. I'm Juan Maldonado and it's a pleasure to start the week with some of our trading plans. Today, before we start, let me show you the Elliott Wave Street membership. We have this special offer where you can sign up for the first month, just $19, so you can trial the Forex, the stocks, or the full access membership. You will get your immediate access to watch all the wave counts that we have in these markets, plus the daily video Monday through Friday with the updated view on the markets, daily trading plans inside the video, and a lot of details that you can use to benefit from the Elliott wave counts. Also, we have the education area. Every month we add a new content. This month we are checking momentum indicators and of course the relation with Elliott wave. So this week we are presenting, that's on Wednesday, the part 2 of the momentum indicators. Of course, all the previous parts, all the education library is inside the website. So once you sign up, you will get immediate access to the Elliott wave crash course, to the candlestick course, and more. So you can sign up for any of the plans and you will get immediate access. All right, traders, so let's start today with the euro. Currently, the global markets are facing a disease that is called high inflation. High inflation is something really bad for the economy because the central banks around the world need to fix it. In order to fix it, in order to fix this disease, they need to apply a medication that is called interest rate. Higher interest rates is the medication to fight the disease. Currently, they are putting 75 basis points per meeting to try to solve the issue. However, this medication has some secondary effects, and that's, for example, that employment should go down. So the unemployment rate should go up. And something that happened last Friday is that unemployment rate fall going against this logic. So that's telling that the 75 basis points are still not working to fight inflation because unemployment is still pretty low. And we need unemployment to move higher or employment to move down, is the same, in order to have inflation moving lower. So what the Fed, that is the doctor that is putting this medication in our patient, that is the global economy, clearly is not working. And the other effect that has increasing the interest rate is that the stock market and all the risky assets are going down because they hate the high cost of money. Higher cost of money, bad for the markets because they discount the future. So we are in this trouble where it seems that the Fed needs to become more aggressive or still continue increasing by 75 basis points after each meeting the rate. So clearly bad for the stock market, clearly bad for the risky assets, good for the US dollar. And this week we have inflation report that seems that it's going to be better than expected. However, we have to be careful. So we are facing one of the most complex markets in years. The last time the markets were involved in high inflation was in the late 70s, the late 70s and the beginning of the 80s. And on that time, the Fed needed to increase the interest rate higher than the inflation rate. This time, we are not seeing that because that would be crazy. But anyway, seems that the Fed needs to continue increasing the rate to fight this huge inflation. So that's a little bit of fundamentals. Of course, in the membership, we cover those details a little bit deeper on the daily videos. Anyway, we are looking this week on the euro to have a lower low. This leg up was pretty strong, the corrective wave. It can be some sort of accumulation of a stop in action. And this week, we are looking for the price to test this area. Once we have the price testing this area, taking out this liquidity and probably building rejections, we could start buying the euro. In the meantime, for example, for a swing trade this week, I'm looking for wave 2 in order to sell it and follow the leg down. Let's continue with the S&P. On the S&P, something similar is happening. We got the S&P selling off strongly after the news. So it seems that we are going to reach the previous low. Everything is pointing that we are going to reach the low, that we are going to take out all this liquidity. Imagine all the stops, all the limits that are here. So the plan for the week is to take out this area. And there could be two options. First option, the one that I'm looking, is having a nice reaction. Imagine copy and paste this reversal. So the price overcomes support, rejects, and we have this beautiful green candle, this one right here, on the 4-hour chart or the hourly chart, right? I prefer the hourly chart, but it doesn't matter. Imagine that same candle happening here, rejecting this low. That will be an entry point. That will be a long entry point to start building a position on the S&P, and of course watching how the price moves and all the other things. But that would be showing demand at the low. However, on the other hand, if we have, let's say, a big sell-off crossing with big candles this area, we are going to be in something different. So from this point, from this area clearly short the S&P, the bias, and we will see how it's going to impact the market, the previous support, in order to find out which is going to be the next step. You see, another reason to join us in the membership, so you have an updated view every day of what's going on and what's the plan. And finally, let's have a look at the dollar index. The dollar index is pretty strong. It's pretty expensive. Is heading higher. Is likely to move back to this previous high. So looking for bullish price action on the US dollar. But this might be the last leg. You know, it's so expensive, the US dollar, that we know that on the worst part of the cycle is where markets are going to start recovering. So that's something key to understand. All right, traders. So that's the plan for this week. Please join us in the Elliott Wave Street membership to learn more about this fantastic tool to understand the markets, to plan the trades, to manage the risk. And also we have a lot of details about fundamentals and about the institutional cycles and more. So I'll see you inside the membership. Have a fantastic week. Take care. Bye-bye.